partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. Chip Nellinger is with Blue Reef Agri-Marketing out of Morton, Illinois, and he's nice enough to come on and talk about what's happening in the marketplace. So, Chip, how you been, man?
Hey, doing well, Casey. We're still here. We had kind of the Toto and Kansas experience last night. That big system moved up from Arkansas, and I don't know how many dozens of tornadoes there were, some wind, some big hail, but we made it through and made it through the USDA report as well. So kind of got through everything unscathed, at least in this area from the storms and the report.
Yeah, there's some pretty heavy storms last night that went through there. I was watching that on the news and paying attention to what's happening there, and you had some pretty big tornadoes in the area. It sounded like there's some large hail and heavy winds and those kind of things out there too. So thoughts and prayers out there, everybody out there right now that's working through all that. But like you said, there was a USDA report came out yesterday, and there were a little bit of fireworks on it.
There were.
You saw some pretty big climbs here based around it, and it all had to really do with ending stocks.
It really did. It's was I like to say it's long awaited, highly despised, at least in my mind. But we got it out of the way. We could get into an entire podcast as to how they can maybe tweak this thing on the acreage side. It's as of March 1st, planning intentions. It's survey based, and a lot of times it's based on old information. A, the market has moved a lot, and B, it always comes down to Mother Nature anyway. We could intend to plant 100 million acres of corn, but we're not going to get it in unless we get a window early to do that. So we did have the acreage report. I think it was pretty well anticipated by the market. Came in 91.96 corn, 90.1.96 million corn acres. That was a touch higher, about 1.2 million almost acres higher than the average estimate. But there was a lot of talk going into this report for the last few weeks of, could it be 92? Could it be 93? I think there was even a private estimate out there close to 94 million acres of corn. So I think the market, in the case of corn, anticipated that. I don't think it was a shock. It was 87.5 on the beans. That was, maybe 700,000 acres below the average estimate, towards the low end, within a couple 100,000 acres of the low end of estimates. So that was a touch friendly on beans. And now the question is, there's oftentimes big moves, which we've kind of seen here yesterday on Friday with new crop corn and beans. That can actually swing some acres back, right? So this March acreage report, just for a lot of reasons, I kind of despise it. But along with it, quietly, we also get a quarterly stocks report. And keep in mind, I always like to remind people it's not the ending stocks that the USDA projects on our normal monthly crop reports. We're going to have one of those coming here in about a week. The April crop report, the USDA will put out an ending stocks projection, and that is at the end of the crop year for 2023, after we produce a crop and after we have the demand that uses the production. Here's how many bushels are left over. On these quarterly reports, like we got Friday, It's as of March 1st, what is left in commercial storage at elevators and co-ops, farmer-owned storage, as well as what's in transit on barges and rail cars. And it's a good snapshot to kind of get an update of what the actual demand has been. And it was very friendly on both corn and beans. Came out 7.4 billion bushels on corn, below almost 70 million bushels below the average estimate. So friendly there. 1.685 billion on the beans. That was about 65 million below the average estimate. I think when you look at this though, and what was so friendly, if you compare where we were at March 1st of 23 versus the prior year, March 1st of 22, we ended up like 347 million bushels less on corn, and I think about 220 some million bushels less on beans. And if you remember back, that was pretty tight a year ago. So we're looking at an incredibly tight stock situation domestically in the United States until we get new crop supplies, this coming fall. And obviously we know that South America raised a big crop in case of Brazil on beans. Argentina, fighting a drought down there, and they still don't have a real handle on exactly what their crop size is. But this thing's going to get really interesting. And you saw big moves yesterday, particularly led by old crop beans. They were up, 30, they're almost 31 cents, back north of $15. Put essentially going back a week and a half from the banking scare.
Yeah.
We put $1 plus, probably $1.05, $1.07 on the old crop bean market in 6 trading sessions. So talking about some volatility in here, and these reports really are going to make it really interesting as far as, what are we going to plant? How's our growing season going to go? Any little, we cannot afford to have any little hiccup whatsoever during our growing season. You can argue, like on this corn number, just round it up, it's within a few thousand acres of being 92 million. Let's call it 92 million. As always, you don't really get big changes in the heart of the Corn Belt, the I states, Nebraska. There were a couple little tweaks there, a couple 100,000 acres, I think in Iowa, a couple 100,000 in Illinois, Indiana. But the big swings come north in the Dakotas and in the South. And you saw that again yesterday. You put a weather map up, and South Dakota's most of the states on tap next week to get anywhere from 10 to 20 plus inches of snow in Minnesota, snow in North Dakota. I don't want to be the Chicken Little sky is falling guy, but if we're going to plant 92 million acres of corn, we got to get the snow out of the Dakotas and Minnesota first.
That helps.
And an April 4th or 5th blizzard, doesn't bode very well if you're wanting to get out and plant a bunch of corn up there. So will we be able to do it? It all comes down to Mother Nature, but at the heart of it, the stocks number is what's going to drive things. It's incredibly tight out there domestically.
Yeah. We're supposed to out here in the Panhandle. I mean, I think we're supposed to get somewhere, depending on what forecast you listen to, 6 to 14 inches, depending on what you're listening to. And it's that time of the year too, where you get that really heavy wet snow, which is good, and it doesn't typically last very long, but man, I tell you what, it does wreaks havoc out there when you start looking at trying to get field work done, that last little bit of stuff done before you start hitting the field. And we're still having, 20 to 30 degree mornings, so the soil temperatures are still a long ways away from being anywhere near going into that April 15th sugar beet planting period that we see out here. So we've got a long ways to go. Like you said, Mother Nature's got to really help us out here a little bit to get things started and get things rolling. So
yeah, and it can change fast. I don't want to be the guy that's talking up a delayed planting, but the Dakotas historically, that's where you do see a lot of the prevent plant acres. Throw out some of the extremes the last couple of years. Going back a few years, we had that outlier year, but historically, there's a lot of swing acres that end up in prevent plant in the Dakotas because of that. And you get a late wet spring like that. It looks like we're into, we got to get the snow out of the ground. And then if it warms up fast, you're talking flooding potential. It's going to take a while to dry out up there. And, they don't have as big a window. And so that's something that the market probably doesn't care about today on April 1st. April 20th, May 1st, the market, if we're still fighting that, is really going to start taking notice and paying attention, I think. And, the Southern Hemisphere production still in a little bit of a question too. And so as we get deeper into harvest on those beans in Brazil, kind of try to zero in that crop. They haven't really started harvest yet in Argentina. They're a little bit later. We know the drought, it's like a 60-year drought, and their production is really hurt. But the ultimate crop size in Argentina for corn and beans both is going to be still a potential market mover as well, and kind of let the market figure out, all right, we know it's tight in America, but what's this pool of bushels look like in the Southern Hemisphere? And we got a long way to go before we've got new crop supplies here. So we're going to have to rely on the Southern Hemisphere, which we know has been curtailed by that drought in Argentina.
Been a struggle. All right. Let's jump down and talk about what happened in the protein complexes down here. So you look at cattle yesterday, saw a pretty big jump yesterday in cattle, 80 cents from Thursday. So it was a big climb. And you saw that June futures climb about a little over $1.12.5 or so. So you had a pretty big move on that. So I guess talk about the cattle market right now. It's been great for a long time as far as seeing some pretty steady, either holding tight where it's at a high level, or we're seeing these intraday moves up and down where we're seeing some pretty big movements. So I guess talk about the cattle market a little bit. We see happening there.
Yeah, you've seen a lot of volatility in cattle as well, going back a week to 10 days. Cattle market kind of got caught up in that, big sell-off that the financial markets and commodities had because of the banking scare and, Credit Suisse over in Europe and Silicon Valley Bank here. You had a lot of liquidation from funds, and the cattle market wasn't immune from it. We had a several dollar break off the highs. But all of a sudden, the cash market, just caught fire this week. I've seen some moves in the cash market, that were surprising and ended up $2 or $3 higher. But you're talking some areas were $5 plus higher in cash this week, and it really shot the futures higher. We had the outside markets pretty stable this week. We had the dollar kind of softening up a little bit. And then you had this much better than anticipated cash trade in cattle, and you shot some of these cattle contracts, live cattle, into new contract highs this week. So it has been a lot of volatility out there, but the cash market still, as a result of everything we've gone through the last couple of years, massive drought, herd liquidation, numbers are low of on feed, and then we've had a really rough winter in some areas, and it's affecting performance. And the cash market is holding together and rallying, and so that's really what's driving this cattle complex right now, and pushed into new highs on a lot of these contracts on Friday. I'm not saying you're going to, see us $4 or $5 higher every week in the cash market, but that is going to be something that continues to support us, because it took us a while to get to where we're at with all the liquidation, and it's going to take us a while to kind of come back out of here and rebuild these supplies.
Absolutely. All right, same thing with hog. You saw a pretty good move yesterday, up 2.5 cents. So far this week they had like about a 20-cent gain, it looks like. So hog market's had a little bit of rally this week.
Yeah, hog market's been beat up here over the last month or so, and part of it is just too many bigger supplies out there than anticipated. Thursday afternoon, we had a hogs and pigs report. That's a quarterly report as well. It comes out and it sections out a lot of different categories of, weights of hogs, farrowing intentions, out several months ahead of us. And overall, it was pretty friendly. They did have a revision higher from the previous one. And I think that's part of the reason that was kind of taken fairly well, even though that was a little bit bearish. I think the market had already digested that and kind of anticipated that because of the falling cutout and cash market. But as you really sift through that hogs and pigs report, out ahead of us, it's pretty friendly. The numbers were all towards the bottom end. As you get out there, with these lower weight hogs, the numbers were all towards the low end of expectations. and below the average expectations. The farrowing intentions didn't show much in the way of expansion. And so, if we can get through these numbers in the short run here, especially now that you've kind of liquidated all the funds out there, I don't think they're short a record amount, but I think it's close to a record short position that the funds hold in hogs. All you need is a little bit of spark. If you remember back a couple weeks, China was talking about, hey, ASF is coming back in a big way. The market kind of shrugged that off and didn't care about it at that point in time. But now with these tighter numbers based on that hogs and pigs report, if you continue to see ASF be a problem in China and they come back to the hog market, for pork in a big way here, it could get explosive out there. Summer seasonal, is at our backs here. We typically see things tighten up, cash market and cutout improve into late spring and early summer. And, I see better things ahead. It's been a brutal sell-off here, though, in the short run, but we kind of took it in stride, some of the bearish numbers on that hogs and pigs from the front end. And I think we're in a good spot to where we could maybe rally with the right spark in here. So, I'm hopeful that hogs going into summer kind of follow that normal seasonal improvement and can see some nice gains and maybe some really nice gains. I wouldn't, rule out anything, well north of 100 on these summer month hogs, particularly the July and August contract.
Right on. Okay. Good stuff as usual, Chip. Folks want to reach out to you and get more information about what it is you're doing over at Blue Reef Agri Marketing. What's the best way to do that?
Best way is just give us a call here at our office. It's 309-550-7213. We'd love to chat with you, talk to you about what you're doing with your risk management plan and how you might be able to improve that and execute a little bit better.
Right on. Well, Chip, I appreciate you being on the podcast, man.
Yeah, thanks for having me on, Casey.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Check out the video version of this over on YouTube at Moving Iron Podcast. And everything Moving Iron related, go to movingironllc.com and you can find it there. Information for the Moving Iron Summit coming up here in Nashville, Tennessee, September 11th through the 13th. You get all that information on the website. You can also go send me an email at MovingIronPodcast at movingironpodcast.com, and I can fill in any gaps that you might want to have filled in there. So with that, I'm Casey Seymour with Chip Nellinger. Let's go move some iron, folks. Out.
Moving iron in the 21st century.